Hello, everyone, and welcome to our Q&A Cafe for SAP Business by Design. Today we have Alex Waddell teaching you about sales tax returns in SAP Business by Design. Everyone will be on mute for the duration of this session, so then we can record it. And then once the recording is done, it will be sent out about 2 days after to all people who attended and also the people who signed up and couldn't attend. We also put it into our YouTube channel, VisView Solutions YouTube channel. You can find it on there on our training series or on our ByDesign training series as well on our playlist there. Not next week, because here in Canada, a middle of the week day off because of Remembrance Day. So November 11th is a holiday. So your next session is on Wednesday, November 18th. And that's with Laura Hicralo, and she's doing what's new in 20.11 ByDesign release. So that's exciting. Please register for that. Registration details are on our website, on our resources page, or they'll go out with this email that goes out within 2 days. So without further ado, I will mute myself and Alex Waddell will take over.
Great, thank you so much. So welcome everybody. Thank you for attending today's session. And why wouldn't you? Because what's more fun than sales and use tax? So yeah, today I wanted to just spend a little bit of time and show you how the tax return functionality specifically works. This is a really global element of the system, so it is sort of country agnostic. The demo environment I'll be focusing on and the tax return I'll be doing is going to be for a US company, but the principle is exactly the same. So if you have any questions as we go along, please feel free to drop them into the question or the chat panel. I'm happy to answer questions if I'm not able to answer it right away. Or even if you have some comments, if you just want to let me know kind of where you're at with your tax setup, if it's something you're using and or you have set up and you're not really sure if you're using it correctly, I'd love to know the reason you're here. So any questions, any comments help to make these sessions better. So with that, let's dive in. I'm just going to show you a little bit of some foundation that's required. So I won't be talking specifically about the tax engine because those are specific to different countries. If you do have questions about your localization of your tax engine, how your tax regions work, things like that, feel free to drop those questions in. If they're easy, I'll try and answer them. If they're not, it's maybe something we could carry over to another session or we could get back to you individually. So what I'm showing you on my screen right now is the chart of accounts. I just wanted to go over, this is a very simple configuration in this environment, and you don't need to have a lot of complexity in this. But at the core, and once again, doesn't matter which country you're using, you are going to need a GL account to represent your sales tax on your balance sheet. And typically that's a liability account. This is something you're probably having to pay. And once again, that may depend also on the region you're in. So if you are in Canada or the UK or some other where you get tax credits that you can offset, you could be using more than one account. That's really up to you. You could show, your liability and your asset in different parts of your balance sheet. That's totally up to you. So here we just have a single account set up. We use one single account no matter how many tax regions. That's very useful, especially if you're in the United States and you're dealing with like 50 different US states. You may remember if you're coming from an older system like QuickBooks or something, you may have had a sales and use tax for California and Texas and all your different states that you would do business with, so that you could easily identify them. That is not needed here because the subledger for tax management is going to keep track of all of your tax calculations based on the specific tax authorities, but they will populate them all through this one GL account, and you can rely on that subledger. So no reason to set up a multitude of tax accounts for all those different tax regions. So this is a control account that is important. It's maybe not mandatory, but it is recommended so that your tax return will actually reconcile and clear out, and you just have confidence each month that whatever's sitting there is just sort of a period rollover. and you don't really have to reconcile. You can just sort of trust the balance in this account that it ties out to your tax returns. And then the GL account type is set to tax, and that's only for the purpose of linking it in your GL determination. So I'm just going to flip screens. If you're not sure what I'm doing here, we do have other sessions on GL determination, so feel free to check those out or reach out to me if you have questions. So this is the GL determination setup screen for tax. And this does get to be a little bit more complex because it can be country specific. But because I'm just looking at a US one, once again, we've set this up very straightforward. So we have an input tax GL determination and an output tax GL determination and a sales and use tax determination. So input output, that's very important for countries like Canada or the UK where you have tax credits. So you have to clarify which are input and output. In our case, we're just using the same GL account for all of them. Withholding tax, I'm not going to really talk about that a lot today, although that tax return is also in the tax engine. We could do a follow-up session on that if we want to get into sort of 1099 reporting. And then finally, your tax payable. So there are two different events that happen with the creation of your tax return. We're going to show you that in a minute. But one event is the release of the tax return, and the other one is the payment. And so the idea behind the release of the tax return is it's going to kind of scoop up everything that is payable within that time frame that you've run your tax return. So typically that's a calendar period. And then it would move it into, like a tax payable account. And then from there, the second event would be to actually pay your tax. That's also done through the tax management. We will show you that. And that would move it out of that tax payable account into accounts payable. And then, you would clear it through your cash or however you make your payment. So many of our clients do not bother setting up a separate tax payable account. What that means is that one event, the release, just really debits and credits through the same account. It's still a liability account, doesn't really make an impact. But if you do have a lot of different states that you're doing taxes for, maybe a lot of entries going through and you do have to do some reconciliation, maybe it makes sense for you to set up a separate tax payable account. That's totally up to you. So that would have to be set up in your chart of accounts and then link through here. So that's really the foundation elements. You close out of these setup screens, and we're going to jump into doing our tax return here in a moment. So before we do that, actually, before I even show you this, let's just go in and talk about your tax authorities. So we're going to be looking mostly at the Tax Management Work Center. It's broken into a number of sections. Your master data here is your tax authorities. So this is something you'll set up once. You don't need to touch this unless you start doing business in a new region and you have, a new sort of tax nexus that you need to set up. Then you can create that tax authority. You have the periodic tasks to actually run your returns. And then you have the transactional stuff, which is building your tax returns and doing the manual tax entries. So we'll look at most of these today, but let's just start with your tax authorities. So your tax authorities have two elements. They have a tax arrangement and a tax authority. And these two things are linked together and really associated. Before you can create a tax arrangement, you have to have a tax authority set up in the system. And a tax authority looks very similar to setting up, like a supplier or a customer. So this is a business partner. And this data is shared with your business partner data, meaning that if you've already set up your tax authority as a supplier, you can connect those two records when you set up your tax authority here. And so what I mean by that is if I go into here to just create a new one, and I don't know what region I have not set up a tax authority, but let's just say, and I think it's called Texas Comptroller if I remember correctly, but whatever you need to put down as your name. And then what's really important is putting in your state here, because that is what's going to create that nexus. Once again, this is regional, so it doesn't matter whether you're doing a Canadian configuration, you would do the same thing, you would connect it to the province. So once you've made that connection, it's up to you if you want to fill in all of that information. But in the system, you can check to see if that record exists. And so if the supplier is set up, you have the option of choosing them and using them as your tax authority. So that's totally up to you. If this is not a match, then you can ignore it and you can work on it that way. You can just create it from scratch here. So once you've created that tax authority, once again, this is all the information you absolutely need to set up. But if you want to set up mailing addresses and things like that, if you're going to be mailing a physical check, you would obviously need that information. So I'm going to go back to our list of tax authorities. So anytime you can come back in here, you can edit this information, you can update data. So you've created your GL accounts, your GL determinations, you've set up a tax authority. What's next? Now we want to create a tax arrangement. And so that's where we are creating this association between the type of tax return that you want to do and the specific tax authority that we've created. So right here is a list of a bunch that have been previously created in the system. I'm just going to open this up and show it to you. So you can see there's a bunch of different tabs here. And what's actually happened here is the system's opened up my tax authority and it's just taken me into a sub tab called company tax arrangements. So these are really tightly connected. You can go into the tax authority and get to your tax arrangements that way, or you can open up the tax arrangement and then by virtue of doing that, you're actually opening up your tax authority. So once you kind of wrap your head around that, this isn't that confusing. The tax arrangement itself all happens underneath this one tab here. So at this point, you are going to need to establish a relationship with your legal entities that are related to this tax authority and this tax arrangement. So in this case, I plan on charging Ohio taxes through both my Almica companies and my Innovat companies. So both of these have a relationship. For each row that you have highlighted here, you have 4 tabs underneath which explain the details behind that relationship. So your first tab is just an overview. So it's really a summary of what's going on in the other 3. So I'm going to go into this first one, and here's where you would set up the type of sales tax number that you want to set up. And you can see here that there are a few different options. So if you are setting up, let's say like 1099 or something, you would set this up a little bit differently. And then your tax number, and just a note on your tax number, depending on the jurisdiction you're dealing in, the system may or may not validate the authenticity of this. So for example, in Canada, there is a very specific code for tax numbers. If you try and fudge this number or you mistype it, you will likely, have an error message. In the case of the US, it lets us enter anything because likely every state number is different. And it's up to you whether you want to enter a real number or not. Depends on how much you're going to leverage the system to maybe print data out of here. But I would say many of our clients are just going online and filing the payment electronically, either through their bank or their tax authority's portal. And so maybe this tax number is just a reference for them. And then this is really where the meat of it is. So the tax return arrangement. So you're going to want to give this arrangement an ID, sales and use tax return. I probably would, if I had set this up, maybe I did, maybe I didn't, but I would have put Ohio or something in here to kind of indicate that clearly on here. So usually the ID, I like to indicate the state or the region, and then, yeah, sales tax or GST or whatever it is that you want to put in. And then the type of tax return that you're going to be using. So for today's purposes, we're really just looking at sales tax. If you are going to be retroactively putting any transactions in the system, make sure that you backdate your validity on your tax return. And that's really the minimum that you need. Now, the rest of this information down here is kind of up to you. So if you do want to set a person responsible, these thresholds and frequencies really have to do with system reminders and things like that. I would say that a lot of our clients are just, they know that one of the last things they do every month is do their tax return. So they probably don't worry about this too much. I'm not going to go into a lot today around the electronic submission. That could be more meaningful, like with the 1099, if you do need to electronically file. But depending on your state needs or your particular local jurisdiction needs, if you do have questions or you're curious about how this works, let us know and we can get you more information on what's supported for your particular area. So this is the minimum that I need. And if we were setting one of these up from scratch, then you could really go in either direction, but probably just start with your tax authority. And then when you go in, you can go to your company tax arrangements and get to it that way. And so from here, I can add a row. I can put in my company number and then fill out all of that information just like I showed you. Okay, so that takes us through kind of the configuration that's needed. And then obviously the one other piece, and I'm not going to show that to you today, is the tax engine itself. So all the tax codes that the system needs, that's obviously setup that needs to be done. We won't talk about that today. That could be in another entire training session. If you do have issues with that, the way it's behaving or working, do feel free to reach out to us. So I do see one question from the audience. So beside the tax number and the tax number type differences, is the sales tax configuration basically the same for Canada and USA? Yes, it is. So the setup of the tax authority and the tax arrangement is pretty much identical. The one difference is that tax number for like your GST has to be a real number or the system will bark at you. So that typically you'll see it on the invoices. I think it's a 13-digit code that starts with the letter R. And other than that, then of course correct, you don't need additional fields and comments filled out unless you are trying to get into some sort of electronic submission through the system, which I won't be covering today, but otherwise to just do it manually like we are, you don't have to fill out any of that other information. Yes, so thank you for the question, keep them coming. So I'm going to go back into our tax management and I'm going to run a tax return. Before I do that, I just want to show you because I've gone in and I've just put in a couple of transactions. So once again, these are US based. I targeted Ohio. So I've created a customer invoice. So I've billed the customer $50,000 based on the sales tax region in that jurisdiction of Ohio. The system has set up my liability for my state sales tax. And then I also did a supplier invoice for $11,000. And this could be, a fairly common scenario in the US where if you do have an out-of-state vendor doing business for you, oftentimes they will not charge you the correct tax or charge you tax at all because they don't understand, what's required in your jurisdiction. And so it may be incumbent upon you to do your own use tax assessment. So this is another scenario that the system fully supports. So you can create a supplier invoice and not to go on too far of a tangent, but just in case you're curious. So when you indicate that something is use tax specific, then the system will determine that based on the region, so once again, I just chose Ohio, that we need to remit additional taxes to pay, and we're paying it directly to the tax authority because this supplier failed to charge us for it, and therefore they won't be remitting it, so now it's on us. So system does use tax very well, and in that case, we still only pay that particular supplier the $11,000, but we have to remit an additional $852, so our net burden here is our $11,852. And then if this was a situation where you were in Europe or Canada, you may actually have a debit on this entry. So if you do have a goods and sales tax input credit, system would handle for that as well. So as I mentioned earlier, your debits and your credits can accumulate in the same account, or you could put that on the asset side of your balance sheet, since that's essentially a tax reduction against what you are billing your customers. So all of those entries happening mechanically behind the scenes. And then there is also an option to do manual tax entries. So I'll show you these really quick. If you are being careful in the system, hopefully you don't have to do these. And chances are you may do like a preliminary tax return in test mode. Also, I'll show you that, and then decide that you have, some sort of a tax adjustment that you have to do. So as you recall, that tax account is set up as a control account because we don't want you hitting those accounts directly. If you are doing adjustments directly to that liability account through a journal entry, the tax subledger has no idea that those entries occurred. And therefore, when it goes to remit the tax, it's not going to scoop up those entries. And now you're going to have sort of deltas between what's actually showing on your balance sheet and what the tax engine wants to, relieve off of that balance sheet account to remit on your behalf. So that's why it's important that any adjustment you do in the system or any transaction, you are using the tax engine. And what I mean by that is you've got the tax code. And that's available all through the system. So it's available to you, obviously, on all of your subledgers, but also through like your banking transactions. So if you are doing a booking, P&L transactions that come out of your bank account directly, you have the ability when you, journalize that through the bank reconciliation screen to indicate the tax code so that the tax engine is aware that you're allocating something to a specific tax region. So very, very important. Once again, you do not have a GL account for all your different tax authorities. So the only way to know who you're liable to pay that tax to is through the association on those screens. And so failing all of that, let's say we have some sort of a topside adjustment we want to do. So I'm going to just say maybe this is a situation where something, should have had tax on it and it didn't. So we'll keep this one nice and simple. We'll do $100. We'll select our tax code. So I'm just going to indicate that this is standard rate sales tax. And then over here on the state, I'm going to indicate my Ohio and then my sub-jurisdiction. And I'll go down a level here and I'll do my Ohio County. And then because this is a P&L account, I have to make sure that I hit my cost center. So you can see that the system has calculated that there's going to be a $7.75 tax impact on this. So now we just have to do the offsetting row. So really you're treating this like a journal entry, right? So my 107.75 on this side, and on this side, I'm going to say non-taxable because really that represents the adjustment that I'm doing. So maybe I had a transaction that came through that should have had tax, it didn't. So I'm effectively backing it out, re-putting it in with the tax here. That's what's happening. So this gross amount has to net out to zero. I can hit the check button, make sure that I've got no errors. And there is no simulate on this. That's unfortunate. You probably want to put in a description, invoice, tax was overlooked. And I'm going to post this. So if we go back to our journal entries now, and I think I did this, I didn't do it on the first. So here's our manual tax entry. So let me just drill down on that. So that's established our $7.75 liability, and then it's washed everything through our original accounts. So that's how to properly do a correction in there. Do not hit the GL account directly. So once we've satisfied all the entries are in, we're now at the end of the month. This is going to be one of the very last things you do as part of your month end. So you want to make sure that all of your P&L is essentially closed. There's no more transactions, no more payables or receivables. I'm going to now run a sales and use tax return. And this is a list of all the historical ones or ones that are active. You can go in and you can go back in time. You can see everything that was ever run. You can see ones that are in preparation, etc. But from here, I'm just going to set up a new one. And you can set this up as a recurring job. I would say most people don't bother. They just go in and set this up each month, but maybe that depends on how many regions you're dealing in. So we'll call this November Ohio return. And now when I invoke this list, I get a list of all of the different tax return arrangements. So you'll recall that tax return arrangement ID. I was not very happy that whoever set this up didn't put the word Ohio on it, but it does have my tax authority over here. So I can kind of deduce that this is the right one. And that's the one linked to my Almica company. So you're running this for a single tax region for a single legal entity of yours. So if you have Ohio dealing with your two companies, my Innovat, I would obviously have to run a separate tax return for Innovat. So once again, I'm probably doing this a couple days into the month for the prior month. I am going to do this for November, but I'm just going to pretend this month is really short, so I can run the return like that. And I'm going to make this job active, and then I'm going to schedule it. And once again, you can set this up to be recurring, but I'm just going to start it immediately. And if we go back here and refresh this screen, we can see now our new job. And sometimes it takes a few minutes because I only had a couple lines. It was actually really quick. So down here at the bottom, this is telling me that this particular tax return job has completed. And going into here doesn't really do anything for me except tell me the parameters of the job, what happened. It doesn't give me any other data. So if you're going in and looking for your tax return, this is not where you go. But it is sometimes useful to go in here and see if there are warnings and things like that. So there are 1,436 open items. So it's telling me that there's a bunch of things probably from prior tax returns, because in my test environment, nobody is actively doing this. So these warnings could be useful. Something else I should point out, because I just experimented with this today, I tried to go in and see if I could run a tax return for the same month twice, like essentially close October and then go back and put in another entry and run it again. And it actually rejected that. So I got an error here. So I think that's important to know because it's telling me that a tax return here already exists. So I haven't dug into this any further. My advice is try and avoid this by just making sure this is the last thing you do at the end of the month. Other jobs in the system, you can stack them. So for example, if you're running your fixed asset depreciation, you can run it early, and or if you're running your GRIR and you put in a few more transactions, you can go and run it again, and it'll only pick up the ones that haven't been processed. Whereas it does not look like the system likes overlapping dates here in these jobs. So be mindful of that because that could maybe get you into a sticky situation. Okay, so back to our November. It's been successful. We had one warning. We're not worried about that because it's about open things from the prior months. So now I want to go and manage my return. So I'm just coming out of this screen here. We were under the periodic tasks for sales and tax returns. Now we're moving up a bit and we're going to look at the tax returns. So this is where the output of these periodic tasks end up. So this is the run, this is the output. And you can see this default is tax returns in preparation. Once again, all sorts of data you can go back historically and look at, completed, canceled, replaced. Instead, I'm going to look at tax returns in preparation. And you can see the job that's already run here. And it has a couple of functions that you can launch immediately. Like if you want to release this, it's going to effectively do that job that I mentioned early on, where it's going to scoop all your data and move it into your tax payable account. But typically you'd want to go in and you want to just view this and make sure that it looks reasonable. So a number of tabs here. Your first tab is just the overview. This overview does indicate what the system believes is, your owing or due to you amount. The parameters for running it. So good place to just pause for a moment and see if this information looks correct. Did you cover your entire period the way you expected to? So once you validated that, we can go in and actually look at some of the data. So this selection, once again, is just a parameter screen. And then this is really where the meat of it is. So you will get one row for every tax jurisdiction that is covered in this return. So for the US, that is typically a single return is for one state. And then typically your jurisdictions, depending on what state you're operating in, you could have quite a lot of different jurisdictions. But obviously you're reporting to, the one state tax authority, and then they're remitting on the behalf. I'm not probably an expert on how the mechanics of all that works, but I'm assuming those tax authorities then distribute to these other jurisdictions based on what you communicate to them. If I've misspoken there, someone can feel free to correct me. And then at this point, on each of those jurisdictions, you can go in and you can understand the details that make up the return. So if I highlight this row and I choose details, it's going to show me all of the documents. So this list is likely going to be long. Hopefully you are profitable businesses and you have lots and lots of customer invoices and you're collecting lots of tax. So you should have a long list of invoices here. I just have those 3 transactions I did in my test database, but you can see here you have your base amount, your tax rate, your tax amount, so what's expected to be remitted. So I'm not sure in the US if you have to report all this every month or not. I do know in Canada you do need to report the foundation amount that your tax is based on. So you get all of that information from here from your tax return. I guess whether or not you need it depends on where you're located. So if we're happy with that information, you do have the ability to put in some of your own notes. This is the log if there's any errors. If you want to attach anything to this document, you can. But if you're satisfied with that, the next step you're going to do is release the return. And so that does effectively move everything out of that account. And then, as I mentioned earlier, it's either going to put it back into the same account like it will with us because we didn't set up another one, or if you have a specific tax payable account, it will populate that account. So typically that's going to be, like a credit. So in our particular case, I don't think that was posted. It's going to be posted today. So let's go and, right here at the top. So our total, I'm sorry, I clicked on the source document instead of the journal entry. So here's where it's relieving that account of the necessary amounts, and then everything just washes through. So really a non-event if you have your GL determination set up the way we have here. But as far as the system is concerned, it has flagged all of those documents as being kind of, ready to pay out of the system. So another tax return is not going to mark those invoices or tax adjustments as eligible for payment anymore. So then you would do the very last step, which is to move it into a payable. And I would say that these typically are just going to happen like one after each other. So I'm going to go back into my, apologies, I'm going to go back into my tax return. And we're going to go to the one that says now it's been, reported because we have gone past the release stage. And so the last step we want to do is pay this one. And so when I hit the pay button, it's going to propose, and you can see a bunch of other stuff here because my test system has a bunch of garbage in it, like old tax returns that have never been paid. I'm going to ignore those, but you would typically do this every month and you're just focused on, you would be focused on the one tax return that's current. So at this point, your payment methods, all of that is being driven by the setup of your tax authority. So almost always, I would say it's a bank transfer because most people are probably paying directly through the tax authority's portal or doing some sort of a bank transfer, depending on your relationship there. Our objective here is really just to close out the, that sort of payment side of it. So when I post this, we're going to go back into our journal entries. And now we are looking at the payment side. So now we've actually relieved, once again, whatever account you've set up, so the tax payable account, and we've credited our cash clearing in this particular case. So what that means is we now have, if we go down into our payment, monitor, we can see that we have a payment that's been established in the system. And then depending on how you've set up this supplier, I mean, you could literally print a check for that if you set up the supplier. In this case, was set up as a bank transfer. So maybe you're doing that manually outside of the system. Maybe you're creating a file and sending it to the bank, all depends on your configuration. So presumably you know what to do here. So there's the option to create the payment file. If I have actually gone online and paid it, just done a direct transfer from my account to my tax authority, I would just have to go in here to do this step to say set to and transfer to make it eligible now for bank reconciliation. So once this is in transfer, it'll appear in my bank rec screen and I can match that up to my BAI file. So let me just open up this window again. See, I think for today, I'm not going to get into the withholding because that gets a bit more complex. But if you are interested in understanding more about 1099 reporting and things like that, feel free to drop us a note or something in the comments panel. We have probably done some sessions before, so we may already have some recordings on that, but we'd be happy to run one. So I guess I don't see any other questions. Does anybody else have questions, or was this useful for people? Is this something, did you learn anything here today that you're not currently using in your system? What about prepayments? So in that case, are you just doing an estimate of what the tax is going to be? Or are you talking about a prepayment with your customers or suppliers that are taxable? Someone else is very useful. Thank you for that. All right, so I don't see any more questions. I hope everybody got something useful out of this session. Thank you very much for joining us today, and we look forward to seeing you at our future Q&A cafes. Back to you, Kayla.
Great, thanks, Alex. We'll see you. Our next session is for our 2011 release with Laura Hicarlo, and that is on November 18th. That's a Wednesday, and we'll see you then. Have a great week, everyone.